Mirkad here from Grok Trade with a trade from our Grok trading room this morning, and it was on UVXY. Today's lesson is on patience, patience, patience. Here we have it set up. Market opened up here. It was actually in a descending triangle. It dipped down and came back up. This is UVXY, which is a leveraged ETF on the VIX. But here it was basing. This is called a low base. You want to know more about a low base, you can just go to our site, freeonlinetradingeducation.com, where all the free stuff is. Go to the chart school, which is free. And here are the chart patterns. We're going to look at a low base. We're going to look at several of these today. So let's take a look here. It's under the bearish areas, low base right there, and let's go ahead and look at this picture here. So it runs down and it's running along a line of support. And if it breaks below this area, and it's going to be a nice time to be short on that stock. The odds are in our favor. You can read about it there. Here's some examples on daily charts where it's happened before. Here it's setting up on this one. Here it actually did break down. Here's another one where it actually did break down. So let's take a look here at a day trading chart. These are 1 minute candles here, and it's low basing down here. So we'd set up a trade here just below that 935, but the problem was I was on a break. I was refreshing my tea, and what happened while I was away? Bam! I didn't even see it. Now look at this. It dropped now to 930, and it was also doing a mini low base there, and we missed that one too. It was just as I came back from my break, and I called it out to folks, and now look at it. We're basing. So we set our order here, but guess what? The oil had its report, and the morning we were watching the oil contracts fly around after the oil inventory report. We missed this one too. Now is not the time to get in. We missed the order, so we don't get in. We patiently wait for another setup, and let's see if it did. And sure enough, it came right down here and started to low base again. I'm going to put my entry order right here below that support line, and let's see, bam, and now I am in at $9.15. I am short on UVXY. So let's reset this up here, and we're going to use this line as our stop, and we're going to put that right up here at 17.19. So I have less than 1%, about 0.5% at risk in this. That's cool, and let's go from there. Bam, bam, bam. Look at that. Now it's down to the 905 area, and look at the volume come in here. So we're going to take and bring our stop down a couple more pennies here. Not quite to break even. Oh no, let's go to break even. Why not? It's down 1% right now. And let's see. Bam, bam, bam. Look at that. Drop all the way down here to 893. And that red square means it was a new low of day. And look at that huge volume. This could be capitulation. So I'm going to set up a half order down here and get ready to get out half. And sure enough, it bounced up from that area and got me out on the first half at 8.99 for 1.7% on the first half. Going to bring this stop down here now, just right where the 8 EMA is here. So if this thing continues up, if it breaks this $9 area and continues up from there, I've got my stop in place and protect some of our profit, and boom, there it goes. It came up and it got me out right there at 904 for 1.2% on the second half. So let's look at this trade and the patience that it took to wait to the market could come to us. We missed this one. I was on break and we were just sitting to get a look at it. It broke down again. And then we were all set up ready to go, but the oil, our focus was on the oil inventory, and we missed this one. So we said, okay, let's set it up. Let's wait for it to break down again. We're not getting in after it already broke down. That's a low probability trade. High probability, boom, came in. All the way down here, had capitulation, got out half, and then when it broke that 8 EMA, which it hadn't all the way down, that's when I got out. Now here's the interesting part. Look at this. What happened after that? For the next half hour, it did nothing but stay in that really tight range. And finally, a half hour later, it started to break out again. So I was glad I was out my short. And that was a total trade of 1.4% in just 9 minutes. Hoo-ah, that would be about $140 in our model portfolio, risking $10,000 per trade with a 1% stop or $100 at risk. Cool. Well, this is Mark the Meerkat. We are in the Christmas season and in the Hanukkah season. They all both start at the same time. Pretty interesting. So All of us here at Grok Trade just want to wish you a Merry Christmas.